Our top story today, the market rally. Stock futures trading near the flat line this morning, but the major indices closed out Thursday's session with 4 straight months of gains. Now the Nasdaq Composite and S&P 500 also hitting those record highs. We had the best February that we had in almost a decade since 2015. And we bring this up, Brad, at the start of this trading day, at the start of a new month, because I think many investors and many on the street even trying to ask themselves whether or not this rally is going to continue, whether or not the gains that we've seen, a lot of that fueled by really what had been driving the market for much of 2023. And that was a handful of tech stocks, and it was a lot of the excitement surrounding the AI rally. We had initially seen some signs of that rally broadening out just a bit. But as we enter the month of March, once again, it still remains all about AI and a lot of the excitement there.
And of course, the big test was this earnings season and how much. A lot of that fodder for conversation, and where the ambitions for companies that were actually deploying real AI solutions that actually pass through to their margins, where that's actually being realized right now versus some of the far off targets that many of them have set. And here's what's also interesting about this earnings season. Here's some data from FactSet and the key metrics that they've been tracking. The percentage of companies actually beating EPS estimates or beating revenue estimates right now is below a 5-year average. Now, why do we bring that up? There perhaps is a little bit more hesitation for companies to get ahead of their skis, at least in their forecast, knowing that we could be facing this higher for longer type of Fed, where the interest rates are not going to be as beneficiary to some of the major deployment of capital, both at the individual and then additionally at the large company level here. And for many of these companies that are trying to right-size their operations with fears of a recession still lingering, but the soft landing firmly seeming like the Fed has been able to really put that forward here. And speaking of the Fed, you had one of the Fed presidents, Loretta Mester, yesterday saying 3 rate cuts in 2024 feels about right. That's a far cry from the 6 or 7 that we were talking about this year.
It is. And then we also had Torsten Slack over at Apollo, the chief economist there, saying that he actually doesn't see the Fed cutting rates here in 2024, which is a massive shift from the narrative that we heard from the street and really what forecasters had entered the year anticipating when it comes to Fed policy.